Hello and welcome to FountainFX on Monday the 3rd of March 2014. What happened in the end of last week and the beginning of this week is just proving that you cannot really fully predict what the market's going to do. The market is totally random. There are certain things that you can follow based on that, but the best thing is not to take an opinion of it's going long or it's going short. But that it's going long while it continues to go long, and it's going short while it continues to go short, and when it's doing something completely different, then it's doing something completely different. If we see here, I will plot a trend line on here, just so you can see. Last week we saw the actual uptrend of the Euro-US dollar get broken on Wednesday, because price fell and broke through this. It then turned and pushed back up, and on Friday we had a massive rally all the way back up. Obviously, that must have been off the back of bad news for the US dollar, so let's have a quick look at what caused that. So if we take a look at a summary of what happened on Friday, and I've cut out all the previous stuff from like New Zealand and Australia because we're not looking at those. So I've gathered the European and the US data here, and we're only going to look at the red news items. So we've got for Europe, we've got the CPI flash estimates. And that was positive, only slightly, so not necessarily going to make a massive difference to the euro. US dollar prelim, slightly down, so maybe not really going to make a lot of difference there. Chicago, that was up by a couple of points, so pretty positive on the US side, and so it may be a case it's sort of keeping things in balance in that sense. But at 5 o'clock, we've got pending home sales came out, and that's almost 3% difference. Well, that's a massive difference. That's a difference between a country being in growth and a country being in recession, and that's very much the wrong kind of figures to be bringing out. When you predict 2.9%, but you bring out 0.1%, that is a massive difference in terms of pending home sales. And housing, building, and growth, etc., is always an indicator of the strength of an economy. So that's probably the one that caused the massive difference. Now let's go back and have a look at what happened at 5 o'clock and see where the pricing was at that time. So when we come back and look at the 1 hour chart of the Euro-US dollar, we can take a look here, and on Friday there was a huge move in the currency, the strength in the euro, weakness in the dollar. But where the negative news came out on the dollar was on this candlestick. So in all honesty, the news that came out here on this small candlestick here was just literally 0.1% improvement on Eurostats. Not a huge difference, but a massive difference on the US dollar here to show weakness in the US dollar. So either the European economic statistics that came out was seen by the market as being a massive improvement, a lot better than they expected, and therefore the euro just grew rapidly over that, and we should see that in other currency pairs of the euro. Or somebody knew what was coming out, the negative data that was coming out at 5 o'clock on the US dollar, knew about it beforehand and just started selling the dollar and buying the euro to push the price up this heavily 3-4 hours before the news was due out. So this is the point about the market where they say the market can remain irrational for longer than your account can remain liquid. If we see, going back last week, we had a period in the European Open, if we go right the way to the left hand side, where price was in a channel. European Open was in channel sideways, and then it broke out and it collapsed. Okay, so it's shorted. Great opportunity to take a trade, take the short. Then price then pulled all the way back up the following day, overnight, etc., back into a very tight channel. That was only about 5 or 10 points up and down. And then I showed a trade whereby you could put a sell order just below that area using a sell stop, and a buy order just above that area using a buy stop. And guess what? The market actually chooses which trade you take, because if the market had pushed up like that, if you look at this candlestick here, if it had done the same thing, you'd have been triggered into your buy order and you'd have just ridden the trade as the price went up. So that's another way of taking that trade, a very easy strategy of trading. And the price would have pulled down here as well. So I did actually put in a sell stop at the 136.80 and took it off at 136.50, a nice 30-point gain. and I was done for the day, to be honest. I just went, thank you very much, and left it with that. Now pricing went sideways, and the Americans came in around about 3 o'clock on this red candlestick and did what they normally do sometimes, which is reverse what the Europeans have done. So the London trading pushes the price down, New York opens and the price goes in reverse. Now the following day, what happened? Prices went sideways overnight in the Asian session, so that's typical. Not always the case. Sometimes you can get huge moves like this during the Asian session, and often that's because banks are doing their trading, their exchanges overnight, their normal currency trading for their corporate clients and so on, but also because sometimes banks know that the Asian session is a quiet session, and if they want to drive the price up or drive the price down, they can do, because there's not so many counter orders coming in, so they can move the market more easily. But anyway, at the moment we've got a flat session in the Asian session, and then the Europeans opened up by looking at what had happened the previous day and said, okay, then we'll go up, we'll drive it up. So it went up, and then we had some positive news out on the euro, and the price just got a gap here, which means that's momentum. Okay, a gap is more momentum than a big bold candlestick like that. It just means that they couldn't even make the price fill any of those price points because the price was going up so fast, there was a gap. So if you look at that, in the instant that that candlestick closed and the instant that that candlestick opened, price had moved by that amount. Then pushed all the way back up, and it was only when the Americans woke up and came into the market in the afternoon, around about here, sorry, this blue candlestick here, the price then went sideways. Not a lot happened. Key thing to note here is that price has actually finally broken this 138 level, which was this major resistance level. So that's now not necessarily going to be honoured in terms of a valid price point. And in the close of Friday to the open of this morning, we've had a gap down where price just jumped all the way down. So now we're seeing that the momentum has changed. It's pushing down at this point, trying to close. If you see this big candlestick here, treat this as like a big gap as well. So there's an area where price is going to try and get some come back down, create some equilibrium again before it continues up. So there's very much upwards momentum now in the euro US dollar, and we will see exactly what happens today. But beware of certain levels. We've got this level down here, the low of that, which is the 137.60. We would like to that may be an area of support that needs to be broken. Certainly we've got the European Open here, and price pushed down from this area of the 137.90. Beware that the gap hasn't been closed yet. It may be a case that price wants to push higher into this 137.98 to close this gap that occurred here. When I'm talking about gap, I will highlight it. It's literally a case that it closed and it then opened there. So there's your gap, the yellow balloon that I just put on there. So that's really it from FountainFX this morning. Take a look at what's going on. Very much a case that the upward momentum is back. There was a bit of confusion in terms of around about Wednesday, price started to fall. I would look here. I've just drawn in from the low of this pullback upwards. We've now got ourselves a trend line, so you can see prices coming down into it now. So look at that, use that as a potential. I'm going to have to take some of the other lines off. Previously, going back here, we looked at this as a possible, because price fell quite rapidly, as a possible area to short at, and as you can see, price just totally ignored it. Not interested whatsoever. Shows no form of resistance to the upward momentum that happened during the day. So, if price does that during the Asian session, it doesn't necessarily mean to say that there's any buyers or sellers sitting there to change the direction of the market. So we can take that out, get rid of this elliptic. So now we're looking at price here. We can see that it's gone above the 138. The high here, 138.20. That is a valid area of resistance. So it may be a case of pull this up to there to look at that as your area of resistance, your ceiling, because off that price pulled down, then you've got a big gap. and then it's created a lower low. So we have two trends that we have to consider. We have this downtrend and we have the uptrend, and we need to be looking at which one's going to break to confirm the direction in which the market wants to go at today. Anyway, happy trading from FountainFX, and we'll talk to you tomorrow. Bye bye.